Welcome back to Focus Fridays, the series where we open up the playbook on real estate investing, covering everything from core fundamentals to the sophisticated strategies to help investors grow wealth with confidence. I'm Jared Shum, head of investor relations here at Focus Capital.
And I'm Chad Sheeler, founder of Focus Capital.
Chad, last week we covered the basics, like what is real estate investing and who it's for. But once somebody decides that they want in, the next question is almost always the same. How much money do you actually need to get started? So let's break down this obstacle in a few root questions. So first, why do so many people think that real estate requires huge amounts of upfront capital, like millions and millions of dollars?
Yeah, I think that can relate more to like maybe the larger apartment complexes that are large in size. When they probably think about that costing a lot of money, they probably think about it when they buy a single family home. It's probably more likely the apartment complexes or the big retail strip centers or skyscrapers, the office buildings, right? Those take a lot of money to actually acquire.
And let's walk through kind of some main paths of investing, lowest cost to highest cost. Like what should someone prepare for and expect financially?
Yeah, I would say highest cost would be them buying a large complex themselves or them investing a large sum of money into a syndication with somebody else to operate or be passive that route. Lower cost would be, okay, maybe you go find a home that needs a lot of work done to it, you fix it up, you go put a small down payment down, you fund the renovations or whatnot, and you're into it for a small amount of money. However, you've now traded your time. You have now created another small job for yourself to get that job done. Or smaller costs could be you do more of like a crowdfunding type scenario where you're still a passive investor in syndication, but on a much different scale with a operator you may not know.
And when you say smaller cost, you mean like, 50 grand, 10 grand, 1 grand?
When I think smaller cost people look for, I'm thinking they're looking for a 10 to 20 grand scenario, whereas that probably would not fit a syndication usually. Most syndications are higher minimums than that, more geared towards people that make higher amounts of income, but there's solutions to where people we can get the value on how to build that up, at lower amount.
I think the interesting thing that I have found just by either learning from my position here or previous positions as a limited partner is that really there's an entry point for everyone. It just depends on, what you're trading off. Like you said, like time invested versus capital invested. And like people can technically get into real estate investing with zero money down of their own money.
Yeah.
Because like you said, if they crowdfund, seller finance or anything like that. And some of our investors here at Focus Capital started in the very active space of real estate investing, built up their net worth, built up their extra capital, and then rolled into the next step of real estate syndication. Have you seen other people outside of Focus Capital do that as well?
Oh yeah. I think a lot of people in their mind, when they think about real estate investing, they think real estate investing is to go buy a home every year for 10 years and to pay them off gradually with the rent that comes in, and then I'll be set and be a millionaire, right? They think of that as them doing it actively and them buying these single family homes, what maybe the mantra is, right? The general thesis.
Yeah.
And they don't always realize that passive is a route they can take.
Okay, so let's talk numbers. We're not tax professionals and we're not like financial advisors, but let's say that I, am debt free, but I have 10 grand and I am not interested in the stock market and I know that I want to do real estate investing. What's the best path for me forward with 10 grand?
If I had 10 grand today, I would say I would go find a home in a growing area, probably the worst looking house in the block and one of the better blocks. And I would try and acquire that with some seller financing to where maybe you've got your bank loan, you have your down payment. The down payment can be mostly from the seller, maybe on a one-year seller's note. And you can get into that thing with either zero money down or you just fund your renovations to improve the property, maybe with that and a credit card, for example. Again, a little riskier doing that, and a little more time involved, but that would be the path, in my opinion, with $10,000 to get started, to then build that nest egg to have a higher dollar amount.
Okay, and then let's say that I was at the next tier. Let's say I had 25 to 50 grand. What would you do with 25 to 50 grand?
50 grand, there's a lot of syndications out there that will accept 50 grand. as a minimum. Most are probably higher than that from my experience.
Yep.
But you can go either way really with that one. You can go syndication, be fully passive, or if you've got some time, if it really comes down to time. If you have more time in your hand, you could go find a property yourself and in your spare time fix it up, or flip it, or buy it, rent it out, refinance it, pull the money back out, and repeat. If you have a little extra time, I would probably go ahead and do option B, where you take that 50 grand, go buy a nicer home that has more potential to maybe in the first 6 to 12 months improve the value, pull the money out, and do it a couple of times. You have a lot higher dollar amount to go passively into something else, while also keeping those assets and keep them cash flowing.
Yeah. And then let's go to the next tier. So let's say they have 75 to 100K. I feel like 75 is still a little bit low for most syndications, and 100K is usually the entry point, the minimum investment on a lot of projects. Where would you kind of go there?
I would do syndication, and that would involve learning about what to look for, how syndications work, how you get paid, how to source and vet these deals through operators. At that level, if you have that much cash available to go invest, you've got a good business going or a great income. You're better off to double down your income and grow that and invest all the excess capital passively than to try and figure out another job which is real estate on your own. It's my personal opinion.
Yeah. Let's double tap into some of these things. So outside of the actual number side of, how much capital does it take to do each of these strategies, how should someone really decide which entry point is right for them? What is that decision-making filter that they should be thinking about and considering before even like, this is the route I want to go down, and then there's additional filters there?
I think the entry point comes down to time, like you said. You've got to figure out what's your time allocation to this real estate investing. Do you have a lot of time? Well, then maybe not a lot of money. Well, maybe the route there is to go get creative and go find the properties you can get with no money down or very little and build that up. If you have no time and plenty of money, I think that probably will determine your route, maybe the passive way. Does that help?
Yeah, that definitely. Because I think that there's a lot of people that are like, okay, well, outside of the money thing, let's say that I'm on the precipice of one tier and the other. How do I decide which one's right for me? Obviously, everybody's scenario is different, but what are some general kind of like key determining factors that I'm like, yep, this fits a little bit more of what I need?
Well, here's something else too. Like some people are just control freaks. They just want to have control or they want to own it themselves, and they find some reward from like, hey, I own this property and that's mine. If that's you, then you're probably just best suited to be an active real estate investor.
Yeah.
And some guys are like that. We've had a lot of guys that are like that for years and years and years until they get tired of it eventually, but that probably is a better fit for you.
Yeah.
If you have a problem releasing control to other people to operate the properties that you've invested in with your hard-earned money, then probably isn't for you for syndications. Probably is better for active investing.
Yeah.
But if you're one of those guys where, hey, time is so important to me, then maybe it's passive for you.
I think that an important question that I would have is there are a lot of different types of investments. We mainly focus on syndication. That's what Focus Capital does. For people that are interested in other types of investments, well, we will talk about that a little bit on the podcast, and we'll have some other, thought experts on here. What are some other resources that people can double tap into to learn about seller financing, to learn about, these smaller fix and flips to get up to the syndication point, that aren't us, that will provide value for them to learn more about those filters there?
I would say YouTube can be a great resource. Really can. I mean, it's almost like a university now. You can learn all you want to learn on there for DIY stuff or just investing tips or how to fix something, right? So I would say do a quick search on there. We can include some resource sections on our website with certain videos. But I'd say YouTube would be a great place to start to learn more about those different aspects.
Yeah. And then is there any books that you recommend outside of just like syndication, active investing, all of that? Just you talked about Bigger Pockets on our last podcast episode, their podcast. You talked about Rich Dad, Poor Dad. Were there any books in your personal journey from 0 to 1, not a real estate investor to active real estate investor, and then from 1 to 5 now as the founder of a real estate investing company?
Yeah, I'd say early on, the biggest book that was influential to my progress was Rich Dad Poor Dad. I read it every year for like 5 years, like over and over. It was so good. But that was a great book. Brandon Turner had a book that was, I think, The Multifamily Millionaire, maybe part 1, part 2. One by Grant Cardone that was good. But the first 2 were better. And now more recently, it's went more into leadership books, not as many real estate books, but there's been one good investing book I've read recently. That's The Holy Grail of Investing by Tony Robbins. That one is really eye-opening too, about private equity and private credit.
If someone's not ready for syndication yet, okay, and they're not ready to buy a rental, is there a move for them to make? And if so, what's that move?
If they're not ready to buy a rental, not ready to invest, I'd say, yeah, if you're on that path to where you want to become a learner and a student of the education here, like just keep learning, keep following along, listen to our podcasts or episodes. If we can help you grow your personal journey and your net worth and your investing knowledge, and you keep applying yourself, I know you'll make some money along the way to be able to either do it yourself independently, actively, or passively.
Perfect. And then if you could warn someone about one money mistake starting out, what would it be?
One money mistake,
Mhm.
like about properties or what?
I think we would center around real estate investing, but like, is there, we talked about in the last episode kind of mistakes that you made and times that you've overpaid or something like that. But what are some, maybe just some things that have to do with money and real estate investing from your personal and professional experience, that is a mistake that you would warn people about, or you're like, hey, maybe pay attention to this and it has to do with money and it has to do with real estate investing?
Yeah, whether it's about your personal finances or about investments, you have to know where the money's going all the time. You can't just like be hands off for 6 months and then go check your bank account and hope it's okay. Like you have to be tracking your statements, your profit loss statements, your balance sheets, like financials every month. Like I do that. You have to. It's managing your cash flow, managing your expenses, your finances are so important. That's for your business life, but also your personal life as well.
Yeah, and how would a good operator help support their LPs to do that?
By properly reporting every quarter or or earlier, right? Every month or every year at a minimum. But every quarter for us, it's important to give the transparent look on financials, the rent rolls, the profit loss statement, everything.
Yeah. So the real answer to how much money do I need is it depends on what path you choose. But is the barrier to entry lower than most people imagine, just to real estate investing as a whole?
I think it is, yeah, because I think most people think about apartment complex investing, for example. I think it's going to take $5 million, right? They don't understand like you can actually do group investing with another 80 other people, and they all pool money together, and they go buy it together, right? This group investing. Um, but I think you're right. Most people think it costs a lot of money in real estate. They don't maybe understand. Okay, so here's something else. I think a lot of people think you have to buy the property with cash. Then you can buy it with a loan from the bank, maybe sell or finance for the rest. Maybe it's zero money down. They don't realize that. It's getting creative there. But yeah, I say overall, I hope we've solved that myth about it taking a lot of money to buy real estate.
I think that there's a lot of books out there that talk about like the real estate millionaire or like the multifamily millionaire and all these things, and I think that type of nomenclature that's out there, that type of verbiage that's out there, people think that they have to already be a billionaire or a millionaire to do these types of things. I think that while we did talk in the last episode about one way to be an accredited investor is to have $1 million net worth, you don't have to have that to just start out. And then we talked about how some of our LPs started out with probably seller financing with some of these rehab refurbish projects, and then kept rolling forward that investment into a syndication space. And so I think that to summarize and correct me if I'm wrong, is that there's many entry points for everybody at any price level, even potentially zero. You could have zero
Yeah.
capital, as long as you're willing to kind of trade your time for money. And then there's steps for every single type of investor. And if somebody is fully retired, doesn't have a family or other hobbies and stuff like that, and they enjoy being an active investor, there's a path for them. If there's
Yep.
somebody that's making good money, making a sizable income in their active role, and they want to keep that, but they also want to do capital preservation, there's a route for them. And that's a little bit closer to what we do here at Focus Capital, but there are plenty of other resources and great investment opportunities outside of real estate syndication. Wouldn't you agree?
Yeah, I agree 100%. There's ways to invest in real estate on whichever path you're on. And I know a lot of guys have done it with no money down. I know that. I've not done it yet. Never have. But there's ways to do it for sure.
Yeah. Is there anything else that you would any advice that you would give from a personal standpoint? And we'll have other experts on here, financial advisors, CPAs, people that we'll talk about the tax and financial side of the money that is invested. But is there anything else that you would tell someone who is starting out and is really wondering how much it costs to start out?
I think we covered it all.
Yeah.
I think just looking at which bucket you fit into and what allotment of time you have, how much money you have, will determine which route you need to go take.
Perfect. All right. Well, we'll see you next week.
Awesome. Let's go.
Thanks for listening to this week's episode of Focus Fridays. We release a new episode every week, so be sure to join us next Friday and beyond. If you'd like to see our next investment opportunity before it goes public, you can join our investor list by filling out the form on our website, focusedcapital.com. If you have any inquiries about what we've covered on our podcast, general real estate investing questions, or suggestions for the show, we'd love to hear from you. Feel free to reach out to us anytime by emailing us at investors@focusedcapital.com. Take care, and we'll see you next week.